Good afternoon, everyone. It's about 20 to 4 here in the UK on Friday, the 11th of December. Market's off a little bit this morning. As you can see, the Dow Jones Industrial Average below that 30,000 level. The S&P off about 10 ticks as well. And the declines slightly ahead of the advances. Petrol, the foot's come off the petrol on the VectorVest color guard, and it advocates caution at the moment. Nevertheless, the short-term trend is up, the underlying trend is up, and we've got a confirmed up in place. So, but as I say, the foot's gone off the petrol a little bit. There is the VectorVest composite of the USA. And we can see that we're still in this mega overbought situation. Buy-sell ratio at 5.12, the MTI at 1.66, and as you can see, this divergence between the price of the VectorVest composite and the MTI starting to become about a month long now. So that's starting to become quite serious. If we have a look at the S&P 500, we can see that the overall market is much stronger than the S&P 500 in that it's drifting up, whereas the S&P 500 has come off. But it's come off to this last old support. That is the vaccine day, the Pfizer day, and markets have come back and kissed that, and that's the low of today, and the low of yesterday has been defined by that old high. So we're still making rising bottoms. That level is still in place, so we have to assume that everything is okay for the moment. I want to try and have a look now at the shares that I'm holding. And I got out of Apple on Wednesday. I got out of Apple at entry. Didn't make any money, didn't lose any money. Just didn't like the look of it anymore. It was going nowhere. Apps has finally got into the money for me, but the rest of them I have in fact got the stop loss up to entry. So if we have a look at these quickly, right down to Snap, for example, and chart them. There we are, apps. As you can see, pushing up the entry. My entry point was just here somewhere, and it's just about in the money and no more. That's the stop loss, so I haven't got the stop loss to entry on that one. That's AMD. That was the entry point. That was the VectorVest stop loss. My stop loss is a bit closer under the low of that outside day, so I've already taken a bit here. The stop's at entry. Now it can do what it wants. Pins, exactly the same. Managed, that was the entry. Stop loss was there. Got the stop to entry, and it's hanging in there. Upwork, the same thing. I nearly got stopped out on that low. Didn't quite get stopped out, but it was close. It really was close. Roku is going really well. Stop losses, in fact, underneath that low at the moment, and I'm going to try and let that run as long as the general market is up. Square, same, exactly the same thing, and Snap, exactly the same thing. Those are going quite well. The stops are at entry, as you know. When I've made as much as I've risked, I take off half, get the stop to entry, and then do my best to keep my sweaty hands off the second half and just let it run. And that has worked very well for me in the volatility of this market over the last little while. It makes good money as long as you can keep your hands off the second half and you get the runner. Probably only 30 to 40% in fact are runners. But you've got the ability to make money, and in theory you shouldn't lose any money in case unless there's a nasty gap against you, a gap open against you, which doesn't happen that often, folks. It happened with Quidel, I know, but it doesn't happen that often. So reasonably happy with this campaign. I probably haven't been as aggressive as I should be because the market is in this mega overbought situation. So if we have a look at the UK now, the UK, there are things to be done because we've got a couple of shares that are sitting on their stop loss. So I want to go to the market timing chart of the UK, and as you can see, everything is still in place. If I put on the confirm call is up. If I put on a medium-term market timing system called the DEW, then that's up. And if I go to the short-term measure of the trend, which is called the primary wave, then that's up as well. So everything is up, and the advice on the front page of VectorVest, in fact, is VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. So all is good. Some of the shares in my portfolio are causing a little bit of grief, and I know quite a few people have had a heart attack on Avon Rubber. I'm very happy with Team 17. I'm very happy with GB. I'm happy with Tristel. I see somebody emailed me a moment ago that JD Sports had fallen out of bed a little bit today. Lion Trust is going well. Sylvania, that's a really good one. Let's have a look at that one because there's a potential spring on Sylvania. Games Workshop's back above 100 today, and Polymetal is hanging in there. Great results out of CCC yesterday. Cranswick is between the devil and the deep blue sea. It's hanging in there. But the two ones that I want to look at are Hilton Foods and Avon. So if we chart those, this is SLP, Sylvania Platinum. It's been a great stock. I'm in it. See the big outside day in it from somewhere down around there. But folks, it's done what shares normally do in that they pull back to that level, and this is clearly a very important level. Now, if it does find support here and we get a green day here, that in fact would be a Wyckoff spring. It's one of my favorite trading techniques. I would expect support and it to be bid at around the 70 pence level, and if I see a nice green day here, I shall do my best to try and add to that position. As I say, it's going really nicely. This is Hilton Foods. It's a share that has got a great track record. If you look at it over 5 years, there's the February high, and as you can see, it ran well above the February high, probably a stock that benefited in fact from COVID. It's pulled back a little bit and it's found support at this low, and that would be another example of a Wyckoff spring, quite a good example of a Wyckoff spring. It's on a sell recommendation, but ladies and gentlemen, if it falls below these lows, and it was close to it this morning, if it falls below these lows, it will have to go. Simple as that. I manage my stops on an end of day basis, and if it goes down below these lows, that's on a close watch. Okay, and Avon has been one of our best shares this year. Let me get rid of all my lines for you. And as you can see, if we look at it over 6 months, it's trading in a range here. It's been down here before, and this level must hold. It clipped its stop loss yesterday. If you see it going down below these lows, then get out. Let's think again. We can always get back in again. I would expect support to come down around here. So I suppose this share did exceptionally well for us in the COVID period, as you can see, and I would suspect that money's moved out of this share. It is trading above the VectorVest valuation. There's the valuation here at 29. So it's trading significantly above the VectorVest valuation. I would suspect that it in fact, what's happened here is that money's moved out of this stock, which is fairly defensive with strong military contracts that are not going to come and go easily. And I moved into shares that should benefit from the vaccines, shares as diverse as EasyJet and Greggs. So I'm optimistic that this level can hold, and if I were to see a couple of green days here in a similar vein to Sylvania Platinum, I would actually be considering adding to it around those levels. But down below these lows, and like Hilton Foods, it will have to go. Simple as that. I'm in reasonable profits. Always difficult when your share hits 45 and then you only get stopped out at 37. You're given money back, but unfortunately that's the price that you pay to get the big moves. If you don't like that, then swing trade the little bits in between. That's what I spent most of my trading life doing, and now that I'm the wrong side of 60, I'm trying to be more long term. Maybe you can't teach an old dog new tricks, but I'm trying. But very important level. I would expect it to be well bid at that level. Okay, so keep your eye on that. Down below those lows, I think those lows are at 36 odd, yeah, 36.68. The last quote my son gave me, he's watching it for me, is 37.65. Okay, and he sits in front of screens all day, so he can watch it while I hopefully can in fact do other things rather than sitting watching a screen. So go back to the US as always, and nothing much has changed. The Dow is still below 30,000, and on the S&P, it's not the S&P. There's the S&P. That level is still holding, and we're still 36.50. Very, very important level. If this level should go, then the next support would be below 3600, and that could precipitate a sell-off. Let's face it, markets probably need a little bit of a pullback, and that divergence between the price of the composite and the MTI starting to run into something that you have to take seriously. Old George Lane, who taught me the divergences so many years ago, used to say that when the divergence between the price and a momentum indicator gets up to about 6 weeks, it has to be taken reasonably seriously. So folks, 2 shares in the UK to keep our eye on. Reasonably happy in the US because all my shares, the stop losses are at entry, and they all seem to be going reasonably well. Markets very, very toppish indeed. As I said to you on Wednesday or Tuesday or Wednesday, if the narrative should change, re-stimulus, the vaccine, then we could see quite a sudden pullback. So as I said then, not a time for long fishing trips. I hope you find this useful. I'll look forward to seeing all the VectorVest customers on Monday afternoon at 1:30, where we have a guest speaker, a young man called Mark Cowan, who's a wonderful researcher with VectorVest. Bye-bye now.